Position data needs to be put in context of price action, and in today's video, we are going to be looking at only altcoins and how altcoins and position data allow us to actually take great trades. So let's get into it. Hello traders, and today we are going to be going a side-by-side in a more long-term approach to altcoin trading. So the topic in today's video is going to be twofold. We're going to first only look at altcoins, because I believe that this is probably the best strategy that we can find for trading altcoins, is to look at what other traders are doing and then to take advantage of them. And the other thing we're going to look at is much longer term. I had to focus on the 5-minute and the 15-minute in my previous video on positioning, but today's video we're going to go longer term because it's far easier to trade in this slower manner. All right, let's dive in. What I want to do here is let's look at each 12-hour period. We have the 12-hour here, and we have the 12-hour here, and let's go look at how they coincide. The first one that I'm really curious on seeing is, and again, I don't want to just look at the sentiment and then just look for what happened to price. I want to look at price and then look at what happened to the sentiment, if that makes sense. So an example of that is I want to know what happened from 7 a.m. to 7 p.m., also known as 19 o'clock. What happened here? So when price rose like this, what was the reaction from traders? What do we see? This was January 14th at 7 a.m., guys. We had a long-short ratio of 1.08. We go up to 1.81. That is a massive, massive, massive jump in longs. We go from 51.8% long to 64% long. And what's the reaction? Bearishness. Just price just falls and kills the longs. This is just a beautiful display of how taking advantage of sentiment can give you something like that. Minus 11% in price. Let's do it again. Hey, so what ended up happening on these candlesticks here? Well, look, sentiment slowly decreased perfectly, right? Until 117 at 19 o'clock on the open. Let me say that one more time, guys. I want to make sure you guys understand that. The open means that, so the data from 117, 19 o'clock, that was pulled when price was here. This candle was not formed yet. Got it? Now we actually see a very, very low amount of sentiment here after it had fallen because longs got crushed. You can see those longs getting crushed right there on BCH, and price falls. I mean, price rises after they get destroyed. You know, it's kind of just the sick way that the market works. Let's go look at what happened on this candlestick here. So this one was bullish, you know, because we were low. But now what's this jump here and how do we play it? Well, sentiment jumps from 1.3 with a 56% long to 65% long. The longs just come back. They just all buy. A lot of buyers coming in here. Jeez. Okay. This would have been a really interesting time to have shorted because price does, in fact, go up a little bit. Pardon me, not a little bit. It goes up 10%. Then it goes way down. So had you held for that, I mean, you'd be in profit, but this is a tricky play. However, had you not shorted here, and you actually saw this candle print of the 12-hour, what would have happened? Well, what we see is we get a sentiment jump from 1.89 to 2.56 at the very top. At the very top of the BCH USDT market, sentiment is 2.56, and let me say this again. There are 72% of Binance accounts are long. That's insane. 72%. We went from 50-50 to 72, and they all get crushed. I can't say that, you know, jovially, but they all do lose money, and price just falls. Super interesting thing that had happened here, but let's go pick a random one here. All right, what do we want here? I'll do ETC. I actually even color-coded my coins here. All right, ETC. Let's go look at what you're doing. Again, I'm not going to be looking, guys, at the sentiment. I don't really care about that yet. I want to see, A, what happened here, and B, what happened here. 16th January, 19 o'clock. What was the print at 16th of January at 19 o'clock? Okay, do we have data? Right here. Wow. Okay. That is really surprising and really cool, actually. Do you guys see this? Look, when price was here and this wasn't formed yet, 57.5% of the market was short. Jeez. Wow. And after price rises, even more of the market was short. 65% of the market was short on ETC. Jeez. So this strategy, how could we have actually traded and made money on this? If you had bought here because this is just criminally low, and you held, well, first of all, you make a 20% profit. Boom. And price actually kept going upward. So if you had bought here, you see price go upward. This looks great, right here. Where do we know where to close our position, our long-term position here, or really medium-term in this case? Well, that comes into play what happens here. 117 at 7 a.m. to 7 p.m., we get a catastrophic rise. A crazy, crazy, crazy rise once again. Guys, we go from 34% long to 53. So a lot of buying here, just a ton of buying. Where do we get this data? We get this data at the print of 117 at 19 o'clock. Where's the open of 117 at 19 o'clock? Opens right here. Meaning we could have bought here and then sold here. Now, let's take a step back. You may say, well, Bennett, you're looking at historical data. 100% true, and I have to tell you this is, obviously, we know what happened. But that doesn't mean we can't learn from the mistakes of other traders, visually shown in this beautiful kind of format. When I see this low of sentiment, that is a very good sign to buy. But then when I see, guys, a long-short ratio that goes from half to 1.15 on this candle, and then price is sitting here, I'm going to take profit. I'm not interested in holding my long here when this many people buy. And then what do I see after that? Even if I had held my long here and we get this data here, what does that data give me? The ratio went to 1.93. If I didn't close my position at this open, I'm absolutely closing my position at the open here. I mean, do you really want to hold when 65% of the market is now long, when previously 34% were long? Ugh, that seems not like the best idea ever. So, okay, let's look at another bottom and let's go see what had happened at that market bottom. This is, I want to know what happened from 18th of January, 7 p.m., 19 o'clock, to 7 a.m. Now, 7 a.m., actually, I want to know what the print was at 19 o'clock, 19th of January, because that's going to show me the effect this candle had. 19th of January at 19 o'clock. Wow, actually interesting. So we actually go, oops, sorry guys, we go from a long-short ratio of 2.64, we go down to 1.96, so people are closing their longs and hopping into shorts, where? At the market bottom here. Does that make sense? After this candle print, what do we see? From 7 to 19 o'clock, we see a decrease of about, what is that, 2.59 to 1.96, of about 0.6, by my math? Yeah, 0.6. We see a pretty large decrease from a 72% long to a 66% long. So this could have been a potential buying opportunity. But to be honest, this isn't heavenly. This isn't like a drop of 2.56 down to 1. That would be a beautiful sign to buy, but that didn't happen, as you can see. But we do get a little bit of a drop, which is nice. And then what we see is, this is hilarious, actually. This is so sadistic. But let me show you guys what happened. So this would have been a good time to buy, right? After this had occurred. But then the market falls because sentiment rises, as you can see there. And if that didn't shake you out, you would have held. And you can see sentiment continues to fall. A beautiful sign to have held this trade, really, guys, would have been the 2.4 down to 1.49. I mean, this is a massive difference once again. 70% long down to 60% long. Yeah, sign me up. I'm buying. So that we get this candle print at 19 o'clock, 120. 19 o'clock at 120 is the open here. Not the close, guys. It's the open here. Right there. If I didn't buy here, I would 100% be buying here. Why? Because of such a big drop in position data here. This is just a great spot to buy. Had we bought, we're looking at a potential profit of 10% and a drawdown of around the same amount. But the profit comes before the drawdown, as you can see. Let's look at, does Link have enough data, or is it going to go crazy? Oh, no, it actually does have enough data. Surprising. And there's Link. So, whoa, that is a volume spike of all volume spikes. 8 million. Okay. What just happened here? I mean, not what just happened. What would happen here? How do we play this, actually? Well, this data, we get this data at 19 o'clock, and then I want to see what happened after that. This was Jan 16. Oh, we don't have the data. It only goes back to January 17th, so we don't know, actually. The earliest that this goes back to is 7 a.m. on January 17th. 7 a.m. on January 17th is right here, right after the candle. And we're sitting at a, oh my God, 7.83 long-short ratio. What? That is a lot of longs. All right, how many longs actually were there? Because we can get that from open interest. Okay, so the open interest at that time was only $2.456 million. But you're telling me of the $2.456 million that there were 8 longs for every 1 short? Guys, okay. Have you seen a better shorting opportunity? I mean, this is historical, of course, but if there are 8 longs for every 1 short and they're already positioned in longs, that's just screaming. At the top of its lungs, this market's going to fall. And the market did fall. Because you get this data on the open here, remember? And price falls about 2%. Price isn't really able to breach the high because that would allow too many of these longs to actually profit, and price just collapses. It really falls. And had you shorted here boldly, you'd be looking kind of pretty. How do we know to short here? Well, I mean, guys, the ratio is 8 to 1. I don't think any more has to be said with that. That is really interesting. Wow. And then we get a shakeout of longs here, as you can see right there. So what we're doing here is we're just putting a more macro context onto these markets. All right. I know some of you guys are silently wanting me to click a certain one. Hopefully I click the one that you want. If not, at least you still learn. Oh, wait, I have it in my thingy, my watch list. Come on. There you go. So this is a lot of wicks. Okay, this is John Wick City, basically. Jeez, this is going to be hard for me to decipher, but 14th of January, we do have data from 14th of January at 7 a.m. I want to see what was the print at 14th of January at 7 a.m. So we have a ratio of 1.6. That's not really telling me much. I mean, ratio has dropped then, so probably a good time to buy, but nothing spectacular. But this is where things do get a little bit spectacular. We jump from 1.6 to 2.48. Ugh, that's ugly. That's something you want to short after this jump. Where do we short? Well, we would get that data that we just went up to 2.48 long for every 1 short here at the open of this red candle. And had you shorted, I mean, it's tricky here. Your profit's larger than your drawdown, but your drawdown could have stopped you out. This is a tricky one to trade because the wicks though. Let's look for a guy that's not as wicky. It's not like John Wick City basically. LTC's got the wicks. TRX definitely's got the wicks. ETC not as much. I mean, besides him. Link, all right, I think it's definitely gonna go. Actually, let's go XLM. I know for a fact it's gonna get really mad at me if I click XLM. It's gonna close the page or something. I was wrong. It didn't get mad. It just gave me the data. Well, thank you. We get to do the beauty of analyzing XLM USDT. Not as crazy of a ratio as that one coin that we looked at, 8 to 1. Like what? Okay, I'm still cracking up that we saw long short ratio of 8 longs for every 1 short. I'm just going to be here all day just kind of cracking up at that. But what also cracks me up is the print at 17th. We don't get the print because it starts on 120. Oh, lovely. All right. So the earliest data we have is 120 at 7 a.m. 120 at 7 a.m. Where was the open for 120 at 7 a.m.? It was here, but not really much interesting things happen. But what is interesting is this jump. That's an ugly jump. That's not a good sign. Price goes up. Yes, price does go up here. And then when we get to this top here, we can see there's just longs are just piling in here. But where's the absolute best signal? I don't want to hover over it, but it's him. 122 at 7 a.m. What in the world was happening at 122 at 7 a.m.? Price was here at the open. Why is this important? Well, price has gone down, but the sentiment has gone up. That is a very bearish sign. Very, 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 very bearish sign. The price is probably going to continue to fall, and fall it did. This ratio falls so much, it goes from 5.42 to a current 3.43. So if we go from 84.4% long down to 77% long, which to me that's a pretty large drop. But it really looks like that this would have been a really good spot to have shorted because of this rise in sentiment. All right, guys, that's going to do it for today's video. To cover To recap what we covered today, we covered altcoins on the 12-hour, and we were not just looking at sentiment and then applying to price. We're looking at price tops and price bottoms, but particularly price tops, and looking at the sentiment that accompanies them. And that's going to do it. If you guys have any other questions on how to utilize this data, feel free to email me or post a comment on the YouTube. Bye-bye. See you guys soon.